Hey everyone, and welcome to the Everyday Investor Podcast. Hope you had a great weekend. I certainly did. I dragged my eldest kid out of bed at a unusually early time of the day, and we went out fishing, had some good father-son bonding times. But of course, he complained the entire time, bored out of his skull. Didn't help that the fish weren't even biting either. But come on, kid. I'm trying to have a Shimano-powered Norman Rockwell moment over here. But after we finally got our hooks in the water, he says, "This is just too much work, Dad." Too much work? This isn't work. This is fun. But I pondered his complaint, and after a while, I came to the conclusion he's probably right. A lot of the time, fun and work require the same degree of effort. And when you don't get a positive outcome from your effort, all you're left with is work. And that's probably one of the biggest fears that we have when we're investing. When we're putting our money aside for tomorrow instead of spending it today, it's a similar feeling. We've done the work, but where's my reward? 20 years from now, at retirement, am I really going to get it? Is the world actually still going to be in the same sort of shape as it is today? Delayed gratification, though. This should be the central tenet of the doctrine of passive investing. In the sacrosanct communion of frugality and dollar-cost averaging, low-cost index funds are transubstantiated into the omnipotent force of compounding returns. We will all gladly accept an average rate of return this way so long as we're beating fees, tax, and inflation. But just don't look too closely at that inflation story, because once you know what's in the hot dog, and once you learn the real rate that inflation tracks at, you'll never eat another hot dog, and you'll never invest the same way again. To preserve our current wealth, to escape the drag of theft through taxation, and most importantly, to outpace the real rate of inflation, we need to think differently, come to our own conclusions, accept uncertainty around timing, but retain conviction in outcome. We should not only see the problems, but understand the current solutions and search for the better ones. So congratulations to everyone out there who has been listening to my not financial advice when the price of Bitcoin was just $3,000. Congrats, we are now just over $100,000 per coin. This episode today is for you, and to all the others, please bear with me and this unapologetic bit of Bitcoin bullishness. Today, I'm going to be sharing a conversation that I had just last week with Peter Dunworth. He's the director at Net Worth Advisors over in Australia, which provides advice to high net worth individuals and family offices from around the world. Peter is also the founder of the Bitcoin Advisor, and we'll talk a little bit more about how that works as the conversation goes on. Now, before we start today, as I alluded to already, one of my happy places is out there on the water. And it's embarrassing to confess to this, but it's entirely plausible that just last week, right before Bitcoin crossed that $100,000 US dollar mark, I dropped my phone along with all of my Bitcoin on it right into the water. The seed phrase was on a bit of paper glued to the back of the phone. Everything lost forever. And here's where the Bitcoin critics are actually right. Bitcoin is indeed risky. As I've discovered, you can lose access to it. So, since the accident, I've decided to hold my Bitcoin on a special type of multi-signature wallet. This way, if I lose access to my wallet or I pass away, my family still receives the benefit of what this asset might bring in the future. There's a few ways that you can store your Bitcoins safely if you hold it directly and you don't leave it on an exchange or just buy an exchange-traded fund. But if you are concerned about the government or any other criminal, or even the bottom of the sea gobbling it up, after going through the process myself, trust me, you should consider some type of multi-sig setup for a good portion of any Bitcoin that you own. So there's a link in the notes to catch up if you would like to chat with me personally about how the Bitcoin Advisor can work for you in this area. Now, with all that said, I hope you enjoy this discussion. Let's get started. You are listening in to the Everyday Investor Podcast, and I'm Darcy Ungaro. Business, shares, crypto, property, precious metals, and managed funds. It's not about the tools, though. It's about the dream and how much risk you're willing to take along the way. I'm aiming for a healthy margin above an average result for myself, my family, and the people I work with. If you're an everyday person, then please join me. The Everyday Investor Podcast thanks past, present, and future partners of the show. Special mention to Ungaro & Co. for financial advice, Gorilla Technologies for strategic IT solutions, and Icehouse Ventures for investment into Kiwi tech startups. Check out the show notes, subscribe to the fortnightly newsletter, say hello on the socials, and leave a 5-star review. But most importantly, remember, this isn't advice. If you need that, reach out to me or contact your current financial advisor for input. Thanks for joining me on this one. Let's make a start. All right, welcome everybody to the Everyday Investor Podcast. My name is Darcy Ungaro, and today I'm in the company of Peter Dunworth. Peter, how are you?
It's a pleasure to be here with you, Darcy. Thanks for having me.
Yeah, really happy to hang out with you here and have this conversation. Before we start, can you just tell me a little bit about what it's like to be an advisor, a financial advisor to high net worth individuals, and then how you effectively built a business model to advise them on Bitcoin?
Good question. Personally, I think I have the greatest job in the world. I don't think of it as work. I get to deal with great people. Most of my clients I consider friends, and I have the opportunity to try and help them achieve outcomes that they're not able to achieve without my help. And I consider that a great honor and a huge endorsement. And I feel very humbled that they entrust me with that position to share their financial outcomes. I've done that for the last maybe a dozen years, but been in finance for the last 25 or more. And the family office or multifamily office looks after a number of very wealthy families. We advise on a whole range of assets, literally every asset class we look at, but there's one clear opportunity that I try and mandate every client have, and that is Bitcoin, because that is the opportunity that I just think is completely misunderstood. And for the last 8 years, we've advised clients to buy Bitcoin, or going into our 9th year now. And that, I think, is the single most important decision that anyone investing can understand right now. And so we spend a lot of time talking about that. And on the back of advising clients for that period of time, we've set up a new business called the Bitcoin Advisor, solely to advise on how to procure and secure Bitcoin.
Procure and secure. So you mentioned before that it's an asset that's largely misunderstood. So when you kind of saw the light yourself and then you started to share that light with your clients, what was that sort of transitionary period for you like?
One of trepidation and concern, because this is back in 2016 when Bitcoin was not endorsed by Larry Fink. In fact, Larry Fink was calling it all sorts of names. Warren Buffett was calling it rat poison squared. Traditional finance was none too happy with Bitcoin and its ascent at that period of time. And there were countless people dissuading others from purchasing it or investing in it. It didn't have the popular appeal that it has today, or it hasn't been standardized or endorsed, or come into the Overton window of acceptable investing like it has today. So there was a lot more career risk associated with it, in that to advise a client on doing this, and this is where, from an advice perspective, it was very difficult, because there were no clear mandates or regulations from our equivalent of the SEC ASIC to tell us what we could and could not do when it came to this. So we took a very cautious approach and told clients to put in what they're prepared to lose. And then we had every disclaimer under the sun saying, hey, you could lose everything. We can't be clear enough about, the level of risk associated with this type of asset. Despite that, most clients bought some on the fact that we talked about the potential upside to it and then allocated accordingly. And then this is where the question of asset allocation and portfolio weighting is really critical to ensure that no one gets hurt or no one's upset. And when we first started talking about Bitcoin, it was an asset allocation of somewhere between 1% to 2% of their entire portfolio. And in relative terms, back then, a lot of people initially hear that and go, 1% to 2%, that sounds outrageously high. And in risk management terms, 1% to 2% is an acceptable level of loss. Now, that's firstly, you've got to have a catastrophic loss, 100% failure of that Bitcoin. And secondly, if you put that in relative terms, that's the relative volatility of a bad day or a bad hour in the stock market. And when you consider all of those metrics on a risk-adjusted basis, the opportunity with Bitcoin back then was still a solid opportunity. Now, that's where we started, and where we've moved to now is, I'm happy to be personally allocated as heavily as I can be into Bitcoin, and there's no real limiter on how much exposure I'd have from a percentage based terms. When it comes to dealing with clients now, I'm more than happy having 20, 40, 50% of their net asset position in Bitcoin if they want that as a starting point.
Wow. So when you would have first pitched this to clients, it was 1% to 2% because that's basically within the realms of normal volatility with their mainstream portfolio.
Yeah.
And you could therefore pitch it as an amount that you could afford to lose. How has that view on Bitcoin evolved when you're providing advice to your clients? Have you transitioned that from an amount that you're willing to lose to more of a core part of your wealth building strategy, almost like a core savings pillar?
Yeah, and this is I guess the conundrum with Bitcoin in being so misunderstood that I personally believe it's the best savings tool ever invented. A lot of people confuse risk and volatility. They don't understand that this is the risk-free asset now moving forward. If you want to peel the onions back and go really deep into why that is the case, I can demonstrably prove to you that that is the risk-free asset moving forward. But let's just assume I'm right on that's the risk-free asset, but it's not the volatile free asset. There's no shortcut in the volatility. You've got to eat volatility, which is very difficult from managing an emotions perspective. And this is where most of the job, I think, is managing expectations on the volatility front, because we're all human. We all deal with volatility differently, and most people aren't used to such a volatile asset being in their portfolio. That's why it's really good to start out with a little bit and have that conviction grow through time, because the more you know, the more you buy, and the happier you'll be with a higher weighting to it. And from a conviction perspective, what I will say about this is that other than the sun coming up tomorrow, the thing I'm most sure of is that the Bitcoin network will continue producing a block every 10 minutes on average. Now, assuming that's my foundational pillar for an investment decision, and this is the most powerful computer network on earth, this is the most resilient one that we've ever seen, then the conversation can be had, can we allocate capital to that? To me, I think, yes, that's a no-brainer. Depending on a time frame and duration for how long or how liquid you need that money is a critical consideration in the weight that you should allocate to it. If you need capital in the next, call it 5 years, then you should not allocate to Bitcoin because it's going to be wildly volatile. That said, to the upside, I think we're at a really good time in the market where things could exceed expectations to the upside because there are so many tailwinds that we haven't had in a long, long time in Bitcoin. So now is actually a really good time to be investing in that time. And as we're talking, I think it's 28th of November, 2024, just for a reference point. And I think the Bitcoin price is circa 95, 96,000 or US. My expectation is the next 6 to 12 months will be wildly volatile, but to the upside. So
yeah.
This is all about timing, weighting, and assessing risk on in the broader context of a portfolio and how that plays in. It's important to take all of those considerations in place when thinking, how to allocate, because sadly, there's not a one size fits all.
Yeah. I want to come back to the tailwinds present with the price of Bitcoin shortly, but could you just unpack a little bit more of the difference between risk and volatility? So yeah, just break down, like, what do you mean when we're talking about risk and traditional investing? Often it's conflated with volatility. So in the context of Bitcoin, how can you separate those two words a little bit more clearly for us?
It's a good question, because I think if people had a very clear understanding of what the difference was, there would be a much higher weighting to Bitcoin. So in my world, risk represents the existence of existential loss. So the risk that you lose your capital. And I look at this and think, with Bitcoin, a lot of people confuse the volatility, the fact that it moves up a lot and down a lot, with the fact that they can lose their money. And statistically, it's been proven out that if you've held your Bitcoin for 4 years or more, you have never lost money. In the entire 15-year history that Bitcoin's existed, if you bought the absolute top and held for 4 years, or 5 years, I think it's 4 years, you would have made money. And now the average return, or the worst return over a 4-year period, has been over 20% per annum. Yet everyone talks about the fact that, FTX went broke, Bitcoin dropped 80%, gosh, it's risky. And it's like, well, it depends on what time frame you're working. If you're working on a 4-year time frame and the worst performance that it's had in a 4-year period is 20% per annum. That looks like an outrageously good return. And sadly, most people aren't prepared to deal with the troughs in order to get the peaks. And so it's that little bit in the middle between that 4-year period that usually trips people up and shakes them out of a position. And this is where it's really important to either understand what you're buying and educate yourself on what this thing actually is so you don't get shaken out of a position, or alternatively, have a much lower weighting to the portfolio that you can let grow through time that will ensure you're never worried about the asset allocation and the amount that it's going up and down on a daily basis. It really is, if you're concerned about the volatility of Bitcoin, it's one of two problems. Either you've put too much in or you don't know enough about it. You can solve for both of those problems.
Got it. So risk is more kind of in the category of custody, or how we hold the asset, because there is a chance of catastrophic loss if you get your custody arrangements incorrect. We'll touch on that later on. But volatility is just the change in price, and that's just all it's to do with timeframes and waiting and your understanding, like you say. Okay. Thinking further ahead now, when we look at most investing, and this is probably a bit of a cynical take, this is kind of how I would look at it and pitch it to some people who kind of want an alternative worldview on why investing works. I would kind of just say, really simplistically, if 10 to 12% of most investment returns are effectively coming from currency debasement alone, then that's a pretty good place to start. That's kind of like your benchmark. That's kind of what you need to be getting. And Bitcoin kind of gives us a glimpse as to how you can outperform debasement, I guess, or that hurdle rate. When it comes to investing in Bitcoin, or I guess even expanding that out further to other forms of digital assets, perhaps, but specifically with Bitcoin, because it's kind of like sound money, how does that change the way that we should be thinking about investing? Because traditionally we're always denominating it in fiat currency, but should we be thinking about it differently in that we just go through the mental gymnastics of denominating everything in Bitcoin, or does this change things in other ways as well?
That's a really good question. For me, I think where I've gotten to is every investment that you make is a relative investment decision, meaning if you allocate to something, you've sacrificed investing in something else to allocate capital to whatever investment that might be. And I look at this and think, with Bitcoin and the very prescient problem of debasement, this is a huge problem that most people are completely unaware of. And to me, there are only two possible ways of outrunning the debasement that we find ourselves in. And, for us Australians, we are obsessed with property. It's almost a national mental illness that we are so obsessed with property that, if you sell your home and you're sitting on cash for a little bit, you can't afford to be out of the market for a certain period. And it creates anxiety and stress and, I've got to get the money to work, because guess what? The government's debasing me every year to the tune of 10 to 15% when you add inflation and the currency debasement into it. So all of a sudden, that's a very high benchmark for a hurdle rate that you need to meet as far as returns, just to keep on the level that you are. And to me, there's really only two investments that you can look to that are even going to come close to achieving those outcomes, and particularly those outcomes through time, because that's a net 10 to 15% per annum, not a gross 10 to 15% per annum. And a net 10% or 15% per annum is really more like a 20 to 30% return through time. And this is where, say, from a portfolio construction perspective, and I don't think we were sort of thinking about this, but it's really critical to think of. In order to achieve the 10 to 15% through time, you've got to be as tax efficient as possible. And this is where your tax system, our tax system, is set up to encourage capital investment and give that a reduced taxable income or reduced tax rates on capital returns rather than income returns. And so think about this, which I think a lot about, is you need to be able to hold an asset through time without selling it so that you can take advantage of the tax efficiency and the tax inefficiencies in our tax structures to ensure that you can achieve those outcomes of 10 to 15%. And there are very few investments that enable you to hold something for that, say 10-year period of time and outperform a 10 to 15% per annum. And I don't think property does it. At best, even with heavy gearing, that property will just get you level.
Interesting. And why would Bitcoin be any different? Because, like, well, here in New Zealand, and I presumably this is true in Australia as well. Effectively, there's a capital gains tax on Bitcoin. So if you buy low and you sell high, you're paying tax on that difference at your marginal tax rate here. How does adding Bitcoin kind of help you with that tax issue because of that?
And in two fronts. Firstly, it's an asset that you can hold through time. My expectations with Bitcoin is that you'll be able to pass this down through generations. So this will be a generational asset that you'll never have to sell. The other thing that you can do with Bitcoin, which will ensure that you never have to sell, but you can monetize it, is you'll be able to borrow against your Bitcoin. So rather than selling it and paying, income tax on the Bitcoin that you've sold or capital gains tax in Australia, you'll be able to borrow on that. And, we know a few people, we have a few clients who do that they basically borrow on their Bitcoin, access that capital today, spend it, and they keep their Bitcoin. And that avoids them having to sell it. And that saves them a fortune in tax. I think the Kiwi rate is about 40% income tax. And in Australia, the capital gains tax is 24%. And they're happy to keep their Bitcoin, pay the interest on the loan, and just keep adding to the loan through time as Bitcoin goes up in value. And there are two ways that you can minimize the tax payable while at the same time actually being able to monetize and enjoy your Bitcoin or the windfalls that it's giving you.
That feels kind of like that's where the future is going to go, right? Where, because it's effectively over collateralized lending, right? Where, from what I understand, you could technically, with some of these schemes, only borrow 50% of the value of Bitcoin. So it kind of caters to the volatility aspect. You're not going to necessarily get, a margin call on your security, your Bitcoin, because the LVR is only 50%. And because you're borrowing against it, that's not income. It's just a loan that you're spending. And so is that the idea, that you effectively just capitalize your loan payments over time, secured against Bitcoin, which is just going through exponential rates of adoption?
And if you're paying an interest rate of, call it, 10%, and this thing's going at 50% per annum, that's a no-brainer. That's an absolute no-brainer. And what's interesting
people do with property anyway, right? So people do that with property anyway right now. They'll get a house, they'll buy a car, they'll get a boat, they'll go on holiday, just put it on the house because, the rate of capital appreciation is always greater than your compounding debt balance. This is just on steroids.
Correct. And that's the thing most people don't really comprehend. All of these products that come into Bitcoin, they're harder to get now, but they'll be mainstream in the next 5 years. But when they're mainstream, Bitcoin won't be sitting at 100,000 US. It'll be sitting at $1 million or $2 million or $3 million per Bitcoin. And people will be like, I wish I had bought some then. It's like, I take myself, it's not through lack of trying that we've tried to get people to buy some Bitcoin because, we can see where this is going. It's not going to change. And if you understand what Bitcoin is from a collateral perspective, you will understand that will become the global collateral of the world that underpins the entire financial banking system. And if you look at that from a market cap perspective, what does Bitcoin need to do to achieve that type of significance? There's 1,000, 2,000x return from here, just in that alone.
Whoa. Okay. My bullish spidey senses are tingling all over here. So I better let's get into some of these the things that are going on in the world right now, which is reasons to get bullish for Bitcoin, right? So there's two things that I was looking at yesterday a little bit more closely. I'm still trying to wrap my head around it. The Bitcoin bill. So Senator Cynthia Lummis proposing a Bitcoin strategic reserve, and the appointment of Scott Bessent, who has links to George Soros, which was involved 1992 Black Wednesday speculative attack against the British pound. So that guy maybe is going to be Secretary of Treasury and principal economic advisor to Donald Trump. And the whole Bitcoin bill just fascinates me because it involves the revaluation of gold, which is $42.22 according to them right now. If they revalue that effectively, complicated shell games in between, but that effectively justifies the currency credit creation required to buy 1 million Bitcoin. I think it's the most fascinating thing ever, but that's just an example of, I guess, like the recapitalization of a new financial system. What would you read into what's going on right now with the appointment of so many crypto-friendly advisors to the White House potentially. Do you make something significant out of that? Because it certainly feels like that from where I sit.
I agree with you. And I don't think I've ever said this before, but if you can't comprehend what's going on with the appointments that are being made, then I don't know. I don't think, anyone can help you. Like you need to be blind Freddy. You need to be deaf, dumb, and blind not to see what's going on here. I don't think we've ever seen a bigger layup in the markets ever. We've got Donald Trump, who's a Bitcoiner in part. His kids are Bitcoiners. You've got JD Vance, the VP. He's a Bitcoiner, holds Bitcoin personally. You've got Vivek Ramaswamy, one of the advisors in Doge with Elon, who has an asset management company called Strive, which manages equities. He's put in a request to the SEC to change his mandate from equities only to include Bitcoin ETFs. So he wants in on it. Elon Musk hold Bitcoin on the SpaceX balance sheet, did have it on Tesla's. Then you go through RFK Jr., one of his most important advisors, arguably, a tipping point support, which got him over the line. His largest single investment from his largest law case went 100% into Bitcoin. I look at this and just think, in addition to that, Howard Lutnick has hundreds of millions of dollars and is in the transition team in some capacity. Almost every single appointment has an exposure or an interest, a vested interest in seeing Bitcoin succeed. And to think that people aren't going to look after self-interest, like, I've got a bridge to sell you if you don't think that's going to happen. So I look at this and think, just on that alone, the people who are there influencing decisions is a complete diametric shift to where we've been with Elizabeth Warren and the Senate Banking Committee basically putting the handbrake on crypto and Operation Choke Point 2.0 for the last 3 years or 4 years. This is a complete 180-degree shift in tone from the government. So I don't know what's going to happen in the next 12 to 48 months, but it's going to be a dramatic improvement from the support that the US government has given the crypto industry to date. And when you couple that on top of the fact that Cynthia Lummis bill has been tabled, and there is an expectation that they're going to buy 200,000 Bitcoin and have 1 million Bitcoin reserve in the next 5 years. If you can't understand what all that means, I really don't know what to tell you, but it is wildly bullish for everything that's, for the future of Bitcoin.
Does this kind of, I'm pushing the boat out here a little bit, but it kind of almost always, and again, I'm going back to the appointment of Scott Bessent to Secretary of Treasury. It almost has vibes of Bretton Woods, like it's almost like there's some sort of attempt here to revalue the US dollar and have something that backs it, which actually is infinitely valuable. Like it really is the beginning of a new currency system, assuming the US dollar remains as the world reserve currency. I know I'm speculating here, but do you think that could be where this is all going?
I think it makes perfect sense. It makes far more sense than having gold as the reserve currency that the US want to adopt. If you look at the natural advantages the US has, they're the number one exporter of energy. It's questionable whether or not they're the number one holder of gold in the world. Russia and China have done a huge job in trying to get as much gold as they can in the last X amount of years. And you saw last week or the week before, China just happened to find $80 billion in gold. Oh, we just found it. Oh, okay, great. Well, that's wonderful. Like that represents 4 to 5% of the total market cap of Bitcoin. But, they're not going to find 4 to 5% more Bitcoin. It's gone. Everyone knows exactly where it is and how it is. And there's no more Bitcoin that can be found. We know exactly how much there is. There's 21 million. And I look at this and just from a competitive advantage perspective, what does the US do better than anyone right now? They're the world's greatest exporter of energy. What is the fundamental driver of Bitcoin's value, and what is Bitcoin built on? It's built on energy. To me, it's a no-brainer. Like if there is a misunderstanding of that, and maybe there's not an awareness of what actually drives the value of Bitcoin and what secures it, it's energy. And so I look at this, and if I'm in Scott Bessent's position where I've got to choose between gold, which I don't control, and China's got great resources in gold, so does Russia. Do I really want to pump up the value of that? I'm not sure I do. If I'm a net exporter of gold, a net exporter of energy, and Bitcoin's the currency based on energy, to me, that seems like a no-brainer to build the currency built on the thing that you have excesses on rather than the thing you're short on.
And so if there was 200 million flowing through to Bitcoin in the next 5 years, 200 million, 200,000 Bitcoin being bought every year for 5 years. There's a million Bitcoin there over 5 years. That's like 40% market cap folded in amongst itself, right? So that's a massive boost just in terms of the number of dollars that are jamming itself into that finite, scarce asset. What are some of the other, and we've talked about the appointments, what are some of the other key drivers that you're mindful of in the next 12 months, especially? Because we're kind of heading into that zone, right? Where if something's going to happen, we're probably going to see it in the next 12 months, good and bad, probably a bit of both. But yeah, what are some of the other things you're looking at?
I think the liquidity cycle, basically we're starting to enter the business cycle. They're going to be printing money. I note that global liquidity has come off in the last month or two, which is probably a lead indicator.
Yeah.
And they won't be able to keep that up for too long. So I fully expect that we're going to have a flush of liquidity come to market over the next, call it 6 to 12 months. That's going to be a key catalyst for driving the price of Bitcoin up, because typically what happens, every dollar added to market has a disproportionate return when it comes to the upward price of Bitcoin. That's going to be a huge driver. I think it's questionable whether or not we're going to get a reduction in interest rates. But if we do, that's obviously wildly bullish for Bitcoin too, because lower cost of capital means you can go out the risk curve with a lot less consequence, so to speak. There's obviously the regulatory change that we've talked about. There's monetary and fiscal policy that's going to be improving. The other thing that I think's completely misrepresented or not really talked about is that there is a change in the zeitgeist, that Bitcoin is now an acceptable investment. And I think it will become it will become a household name in investing. And every household will be investing in that over the next 2 to 3 years. There's a complete paradigm shift where now this is an acceptable investment to be looking at. I can tell you from my experience being in this for nearly 9 years that the risk when we first started advising on this was there was a career risk in advising on it. Now there's a career risk in not advising on it or not telling clients to have that in your portfolio. And in the period that we've been advising on it, our clients have experienced close to 150x return on their Bitcoin.
Wow.
So how do you turn around, even with 1% to 2% exposure, how do you as an advisor, and I think the next 10 years is going to provide a similar level of return, how do you turn around to your clients and say, oh, I don't think that's a good idea? Like, who doesn't want to triple their money with 1% of it over a 10-year period? Like, you're getting fired if you've talked them out of buying Bitcoin. Like, look for a new job or find a new client, because that client will not be staying with you for very long.
And I guess that is a concern, right? And not to sort of, I guess, cast doubt, or I don't want to bring the industry into disrepute, let's put it that way. But surely it's a concern in the financial advice community if we fast forward 5 years even from now, and we see again that it was the best performing asset. And we remember those conversations, those emails that were answered that said, no, it's a speculative bet. We remember the social media posts that you put out there. You can't just change that quickly without a little bit of an explainer. So do you think that there's going to be some problems in traditional finance in terms of just like, will there be a bill to pay at some stage? And what would that look like if people started to complain that they were blocked from buying the most successful asset of their lifetimes?
The ramification will be a lack of faith in the industry. I think it's a disservice. I think it'll go through what the healthcare industry and the governments are going through now with what they put us through COVID. I think they gaslit us. They limited the amount of information that we could have. If you draw parallels to what we've been through and the response on the other side, and I don't even think we've seen, the back end of the response to COVID. But I think in the next 12 to 24 months, we're going to see a huge change in public sentiment on that and how the government dealt with it. And then if you look at and draw parallels to advice on Bitcoin, the same parallels can be drawn. You've taken something from me. You've limited my opportunity. You have removed an opportunity for me to put food on the table and provide security for my family. I'll just manage my own money. Because guess what? And this is not a problem and a reflection on the advisors, because the advisors I know would love to be able to advise on Bitcoin. This is a reflection on the regulatory bodies not having the oversight to say this is a regulated product. And to be fair, they can't really do that. This is really a problem with the system and the way the system's set up, in that if you're a financial advisor, you've got an approved product list that you can and can't legally advise on. And if you're in a dealer group, you've got to advise on what you've got in front of you. And putting Bitcoin on an approved product list when it's not a financial product is redundant. You can't do that. So the system, the actual industry is set up for failure to start with. So there's a whole host of changes that need to happen. Or alternatively, the advisor just says, look, here's an alternative, or here's someone you can trust to look after this for you or do this with you, and make sure you don't hurt yourself. And to be fair, that's the space that we play in now to avoid those problems. That if clients want to self-custody, we focus on helping them self-custody it. We don't give them financial advice. All we do is help them procure and secure their Bitcoin, which, we're helping them buy something that's not a financial product, and we're helping them secure it, which is effectively the equivalent of a data recovery business, because it's a digital asset. So it's a very unique role that we play, but this is where the tough part for the advisors in TradFi land is that they're stuck between a rock and a hard place. And the really tough thing is that every advisor I know, or most advisors I know, are operating on a remuneration schedule that revolves around how much they're managing. And so it's not for want of desire for the advisor to want to advise on Bitcoin, because if you advise on Bitcoin and it goes up 100x, you've effectively doubled your revenues in 10 years by telling them to buy 1%. So it's just a very unfortunate position, which is going to leave a very nasty aftertaste in the client's mouth to think, you've precluded me from these opportunities and now you want to help me with it. It's like, no, thank you. I know more about this than you do, or that you let on, or that you're allowed to talk about. And so I think there's a huge risk of an exodus of clients.
The parallels between this and the medical profession, it's not too dissimilar to being prescribed ivermectin a couple of years ago by a GP, right? That's kind of what it's felt like for me as a financial advisor, talking to my clients for the past 7 years or so around Bitcoin. It caused me reputational harm. And hey, the main thing, like, it really tests what your character is, right? Like, if you really want to make people wealthy, then tell them what's going to make them wealthy. Just like a doctor would want to tell you, really, what to do to be healthy as well. And unfortunately, sometimes that comes at a cost. And myself, like, I kind of realized this, became really quite acutely aware of this risk issue with Bitcoin at the start of this year when the value kind of went up a little bit. And so when I was doing a bit of research, I was actually approached by one of you guys from the Bitcoin Advisor, and kind of helped me realize just how the multi-sig wallet can really help me address my risk concerns, or the probability of loss if something happened to me, or if there was some sort of attack against my estate. How can I ensure that it is absolutely bulletproof using the best technology available? So I signed up. I'm now a customer. It felt a little bit weird. It took me a while to get my head around it and to really stress test it and feel around the edges of what could potentially go wrong. But now that I've gone through it, I'm kind of thinking, well, fantastic. There's a really amazing tool here that I can talk to my clients about with respect to managing their Bitcoin risk or probability of loss, to remove it completely, so that now, yes, we have the volatility concern, but that's much easier to address once we've eliminated the risk concern. So can you tell me a little bit, or just tell us a little bit about how a multi-sig wallet works, and how, with the Bitcoin Advisor, how you guys administer it?
This is where I think we share a similar problem, in that the whole reason for being with the Bitcoin Advisor, how that came to be, was the fear of clients walking out the door, self-custodying their Bitcoin, and the thought that they could lose millions of dollars that was tied up on a little hardware device. To me, that represented a existential threat to my livelihood, career risk like no other, and something that I needed to solve for. And so what we were able to do was create the collaborative security protocol, which ensures that clients, regardless of what they do, cannot lose their Bitcoin, because we put measures and redundancies in place that ensure that there's no single point of failure. And the beauty of this is that, and I'm sad to say, but we've had 3 clients pass away who self-custodied their Bitcoin. But on the bright side, all of the beneficiaries received absolutely every single Satoshi that they were entitled to, because we had a system in place that had no single points of failure, even if the client passed away. And to me, with a fiduciary duty to our clients, we need to ensure that, there is zero loss with client money. And this is where the zero loss with client money is very difficult to achieve if the client's self-custodying that. And this is where a multi-sig or collaborative custody protocol helps, because it removes every single point of failure. And how does that happen? Well, to explain it, it's a lot like a safety deposit box, in that you leave your Bitcoin in the safety deposit box, and in order to move it out of that safety deposit box, you need not only the client key, but you need another key, i.e. the bank, or in this case, ourselves or the other service provider. They go in together with you, turn the locks, and then you can remove the Bitcoin from the safety deposit box. And much like Bitcoin is sitting in a multi-sig wallet, that sits in that wallet until such time as clients want to move that out, in which case they get ourselves or the service provider to do a co-signing transaction to move that Bitcoin out to wherever they wish. But with all of our clients, we're set up for having that Bitcoin in the vault for an extended period of time. So it's not like we're doing a transfer on a daily basis. This is a generational asset that we want to keep and secure through time. And we found that that's the best way to do it.
So I would have a key, the Bitcoin advisor has a key, and there would be an external service provider whose function it is to hold a key as well. And it requires 2 keys out of those 3 to authorize transactions. And so how does that help in the area of estate planning then? So I pass away and my family, they don't have a clue what to do. So how does this multi-sig setup actually work in practice?
So we're providing a service for recovery. And this is where, if something were to happen to you, your wife would be in contact with us. Before that were to happen, we prepare an estate plan protocol, which is a document that we create, which is kind of like a treasure map for the recovery of your Bitcoin. Now, if someone finds that estate planning protocol, there is nothing that, there is no Bitcoin that person can steal. They can only use the map to find where your Bitcoin is and what's sitting in your vault. And what's important about that document is you can give that to your loved ones, family, friends, your solicitor, your accountant, as a document to put in the back of your last will and testament in the event that something happens to you. And then once you pass away, pull that document out, have a look, right, we've got to get in contact with the Bitcoin advisor. We need to recover that Bitcoin, and we need to put it in the control of the executor of the estate. And so what does that look like? There are phone numbers, emails, contact numbers for the beneficiaries to get in touch with us. Obviously, there are checks on our side to ensure that everything is kosher when it comes to the fact that you've passed away. But once we've done all of the checks on our side of things, then we, with the help of the beneficiaries who have your key, or alternatively, if your key is lost and never to be found, we're not going to lose the Bitcoin. We ask the other service provider to co-sign a transaction that has been authored by the executor of your estate to move that to a wallet that the estate now controls. And this is something that we can demonstrably prove to clients before they pass away, which is, the golden saying of Bitcoin is don't trust, verify. Well, let's actually show you how we recover your Bitcoin before you pass away, so you can basically die with the knowledge that you're not going to lose your Bitcoin. And a secret hope for me is that once we've gone through all of those things and we've built the confidence in the process that you're not going to lose your Bitcoin, there is the ability and the change in mindset that now that the fear of loss and the risk of loss is now being completely removed from your self-custody setup, that opens up the opportunity and the window for talking about further capital allocation to Bitcoin. And that's the hope that we have when we talk to clients, that opens up the window for further investment in Bitcoin.
Yeah, because he just slashed away one of the biggest corridors of loss, which is risk of custody risk. That's cool. And so, in the context of intergenerational wealth, or just, I guess, another way to reach into the future and drop wealth into your next generation or their generation, I'm I've been quite fascinated to hear a little bit about time locking. I've heard you talk
Mm.
about it as well. Can you just explain to us what time locking Bitcoin actually involves? And then maybe just explain to us an example of how we might start using time locking for taking care of the intergenerational wealth transfer piece.
Great question. To me, this is the superpower of Bitcoin that no one really talks about, time locking. And it's a really simple feature in that you have the ability with Bitcoin to time lock a transaction to a certain point in time in the future. And it's such a benign concept. Oh, okay. Well, what does that really mean? For anyone who's ever dealt with estates, they will understand that if they've had any problems in an estate dispute, the ability to time lock a transaction, say 10, 20, 30 years into the future, or up to 800 years into the future, is wildly powerful for ensuring that your wealth gets to the generations that you want it to. And so this is where I think we're going to see moving forward the ability of Bitcoin to be integrated more heavily into a wealth plan, and more importantly, into an estate plan for ensuring that future generations will be able to benefit from the sacrifices that you've made with your Bitcoin. And this is where what's very unique about Bitcoin is that you can time lock a transaction into the future, and there is no government mandate, legal decree, court order, anything on earth that can stop that transaction and revoke it. That is a wildly powerful concept, because every other asset, whether it's property, bonds, stocks, you name it, there is a court order, government mandate, legal decree that could remove that intent of yours to put that through time to appear at a future point in time. With Bitcoin, because of cryptography, there is the ability to put that through time without any consequence. There's no rescission, there's no revoking. That transaction will happen, and that will appear at that point in time in the future when the block height gets to a certain amount or a period in time. Now, that's the only asset on earth that you can do that with. And I look at this and I think, all of a sudden, the legal fraternity is going to figure out that in the order of the universe, cryptography is going to trump any legal decree. And this is going to be a huge adjustment for our legal fraternity to understand that, has this transaction been time locked? Yes. Oh, well, there's nothing we can do. There's no point fighting it. But for any other asset, if there was that decree that I want this to happen in a certain period of time, well, that's a negotiation. We're going to negotiate about this. But with a time lock transaction,
Yeah,
it's as good as done.
because it's left one wallet and it hasn't arrived in the other one yet because the block height hasn't been there. So the timer hasn't reached a certain point, let's say. And so when you're saying that cryptography trumps the legal system in this context, we're just stating a matter of fact, not in terms of authority, just it's a fact that it is cryptographically locked in some sort of absolute zero world. In a state of suspended animation, it doesn't exist. It's in between 0 and 1, therefore it doesn't exist until certain conditions are met, which are very basic. So it's quite fascinating though, isn't it?
The implications of it are mind-blowing. I look at this and think, from an estate planning perspective, this will have a huge issue on a whole host of things. You've already heard Dave Bailey from the Bitcoin magazine influence Trump, talking about using Bitcoin, time locking some Bitcoin to pay off the national debt. If you heard what Trump said, he said, who knows, we might pay off the national debt with a Bitcoin. So by my calcs, if he's saying he'll pay it off with a Bitcoin, we're all terribly conservative and bearish relative to dollars.
Yeah, that's right. We're not bullish enough, and that's the thing, right? Like, it outlasts. You could program a transaction to happen in 30 years time, and when Bitcoin is worth infinity to pay off the debt, it blows my mind. Okay, so, and maybe this is kind of connected to this next question. So a Bitcoin bond, or the concept of a Bitcoin bond, maybe this is exactly how, or maybe this is another application of where time locking a Bitcoin Bitcoin would actually work. But yeah, explain to us how a Bitcoin bond would work, and if we're going to start seeing more of this sort of financial innovation where there's a fusion between digital assets and fiat-based assets.
That's a very good question. And this to me represents a huge opportunity for Bitcoin, for governments, for anyone looking at this. I believe there's an opportunity to create a principal protected note, whereby with rates at circa 4.5%, the US has an opportunity to put together a 5-year principal protected note that would guarantee in nominal terms the initial capital investment. And what they'd be able to do is combine an investment in 80% of the value of that note in US Treasuries at 4.5%. That 80% of the value that they put in would grow through time with interest to make up the nominal investment that was made. But with that 20% extra, you could put that into Bitcoin. And that 20% put into Bitcoin could be invested and vest at the same time over the next 5 years that your bond does. And all of a sudden, you've created a risk-free return with a principal protected note. So capital guaranteed, your capital is guaranteed. And if you did that over the last 5 years, that would be an annualized return over 17%, risk-free. It'd be the best performing bond on earth. And there would be a mountain of capital that would look to fly into that. And what we're seeing with MicroStrategy is effectively a private version of that. He's effectively doing that, and he's being rewarded. And this is actually a really interesting, probably topic to talk about. Yeah, I find mind-blowing is that the risk-free rate of the world is 4.5%. Michael Saylor, who's using basically corporate bonds to go and invest in Bitcoin, is paying 0%. And it's not mugs who are paying 0% for that privilege. Allianz bought $500 million of a $2.5 billion bond. Allianz is one of the best bond managers, money managers on earth. One of the biggest insurance companies, have been very successful, and they've plowed $500 million into a zero coupon bond. What does that tell you? They're not mugs. They're one of the best fund managers on earth, money managers, insurance companies, whatever you want to call it. And they're telling us that MicroStrategy buying Bitcoin is a much lower risk than the Federal Reserves or the US Treasuries at 4.5%.
How does this not disrupt everything though, right? Like it puts on it kind of almost mocks the current traditional financial system when you start seeing evidence that this actually works in practice, like what MicroStrategy is doing. And like it's causing a lot of heated debate within the Bitcoin community, I know, with what Michael Saylor is doing. But I think it's just that he's the most obvious one that's doing it, and it's probably going to be commonplace. Is this kind of like how Bitcoin will change how we invest, in that we will now start making investment decisions based on their policies with respect to Bitcoin?
I think it's got to. And the sooner you get on board with this, the better off you'll be. The longer you leave your head in the sand and ignore this and think it's going away, I can tell you, Trump getting elected, not going away. Look at all of his team. They're all geared up to basically push Bitcoin. If you can't see that, like I said before, I don't know what to tell you, but you're not doing your job. And if you look at this and think, that 0% bond that he just raised on, if you look at the previous 5 bonds I think he's issued, they are the best performing bonds on earth, second to none. Now look at that and think, surely that should tell you something. But to me, the smart money in markets is always the bond market. And those corporate bonds, those convertible notes, the best performing convertible notes on earth, surely that would say something. And what I find mind-blowing is that there is $300 trillion tied up in the bond market of negative yielding bonds, negative real returns. How long before that $300 trillion wants to find a real return or a positive real return? There's almost an unlimited amount of capital that can go into these convertible notes that MicroStrategy is issuing. And then wait until governments get on board with that too and start mandating that 1 or 2 or 5 or 10% of their bond issuances need to be in Bitcoin as well.
Yeah.
all of a sudden it's a very different value proposition. You look at the amount of capital that can flow into this. A lot of people think, oh, you got lucky buying in 2016. It's like, no, you're lucky now. It's completely de-risked, yet all of the capital hasn't flowed in yet. So on a risk-adjusted basis, now is the best time to be buying Bitcoin. If you do your homework, you look at the structure of the capital markets, you look at the equity markets, therein lies the opportunity. Bitcoin has been completely de-risked. It's been endorsed by a presidential candidate.
I was already fairly bullish going into this conversation, but now I was just like, I'm just selling everything now. I'm going to lose a kidney and everything just to put it into Bitcoin. It's great.
Good idea. It must be back here.
Not medical advice. Going back to more pointy head type subject matters, typical growth portfolio might be 80% growth assets, 20% income assets. Let's say when one would construct a portfolio, let's say there's a 10% allocation now towards Bitcoin. Where does it come from? The 80 or the 20?
20. And this is the problem, that a lot of advisors want to listen to their clients as to what they should do. And I just dissuade my clients that, like, with all due respect, like, you've come to me, I haven't asked you, you've asked me. So this is what we're doing. And to be fair, I actually lose clients because they want to look at income. And I'm like, I'm not interested in looking at income because you're losing money. I am focused solely on total return. And when you overlay the inefficiencies of the tax systems that we operate in, maximizing for income is the wrong thing to do from a total return perspective. You're getting debased by the currency to start with, and then you're getting taxed. You're losing half of the gains on tax. Like, no offense, but you've got to be retarded to think that's a good idea. And so this is where people need to get very comfortable with volatility, because unless you start getting comfortable with volatility, you are going to be going backwards in real terms. And that is the problem. I want to solve for real returns. I want to make sure that they win. And giving income in a portfolio is not a way to win. That's a way to give peace of mind, to tuck in and a kiss goodnight and everything's going to be okay. And it's like, no, it's not. Have a look at the inflation rate, the basement rate, all of that. When you add that together, to your point at the start of the show, it's a 10-15% hurdle rate that you've got to get through. Name me any income producing asset that you want to, that you can get 10 to 15% from. But then you've got to double it in order to get the after-tax dollars just to break even. It doesn't work. So this is where I really want to focus on capital efficiency and total return for clients, because that is the only real measure of success through time.
Yeah, that's awesome. Okay. I could probably have a chat with you all day long here, Peter, but one more question. So last night I was just playing around with my my HP2B financial calculator from the late 90s. And I was putting in some numbers, right? So I'm 49 years old. In 21 years, I will be 70. And so I just said, right, starting with $0 right now in my hypothetical investment account. If I put $500 per month into this investment account and I just dollar cost average that money into an S&P 500 index fund, let's say I get a 7% rate of return after fees, taxes, and CPI. So, or I take the Michael Saylor approach and I assume that the compound annual growth rate for Bitcoin is 29% over the next 21 years. Plug that into the calculator. Then instead of getting the $275,000 that I would get in the index fund, I now get something almost like $8.5 million. So like that is a tremendous difference. And of course, there's nothing absolute when we're modeling returns. The past can't predict the future accurately all the time. We have to be careful around this. But in terms of a growth rate to use when you're modeling the performance of Bitcoin through time, would you say 29% might be pushing the boat out there a little bit? Or what would you do?
Conservative.
Really? It's conservative?
Yeah.
Wow. Okay.
It's absolutely conservative. Think about this. Since 2000, Amazon's achieved a 30% return per annum. You don't think Bitcoin's a much bigger invention than Amazon? Like fast delivery of whatever crap you're buying online? Like, no offense, but this is protection from debasement. If you were to just annualize the value of Bitcoin in protecting you against inflation or debasement. We've got an inflation rate at 10%, call it 5%, and we've got a debasement rate globally of over 12%. Add those two together, you've got 17% debasement on $100 trillion total M2 money supply or global money supply. That's $17 trillion. So I look at that and think, if you try and put a net present value on that $17 trillion annually that you're saving, that could be a quadrillion-dollar market cap if you have a 2% cap rate on that.
Wow.
That's a 500x from here. And that's far more than, much higher than the 29% that's allocated. And I think that's perfectly reasonable because everyone, in the next 5 years will understand what the government's doing to our money and they're going to be out of it. Only the uninformed will stick with traditional currencies because they'll be happy to get robbed to the tune of 15% per annum. But by then it'll probably 20, 30% per annum.
So what we're saying isn't necessarily just the story of widespread mass adoption of Bitcoin, because that already is extremely bullish, but we're also talking on the other side, it's a relative thing here, right? So we're talking about at some stage, the masses will wake up to what's going on and lose faith in the currency that denominates all investments right now anyway, or they'll lose faith in fiat currency is kind of what this is predicting, right?
Yeah. And it's just a function of time. It's path dependent to achieve that. It's just a matter of how quickly everyone wakes up. And guess what? For anyone who takes action now and is motivated, there's an asymmetric advantage to you in doing that now as opposed to later when 8 billion people figure it out.
Yeah. That's what I love about this today, is that you actually do genuinely get rewarded for a contrarian open mind. And for so long now, it's been the opposite. It's just so refreshing to know that, hey, capitalism, free market, sound money, and an open mind, they're all completely congruent. It's great. Yeah. Love it. Awesome. Now, I'm going to put a link in the notes. If anyone wants to learn more about the Bitcoin Advisor, reach out to me or click on that link to find out more. Peter, where can people follow you? Where's the best place to go to stalk you?
I think probably on X at Peter BTC Advisor with an ER. Alternatively, the website's www.thebitcoinadvisor.com, and that's with an ER, not an OR. And if anyone's got any questions, please reach out. I'd love to help in any capacity that I can.
Really appreciate that. Thank you for your time today, Peter. Go well.
It's been great. Thanks very much.
Thanks for joining me today on the Everyday Investor Podcast. I hope you enjoyed that. And if you did, please share me around. For the odd giveaway, invite, and sneak peek, make sure that you've subscribed to the fortnightly newsletter. The link is in the show notes, as well as special referral codes from previous guests on the show. Remember, our show partners Ungaro & Co., Gorilla Technologies, and Icehouse Ventures. Lastly, a final reminder. Please remember this isn't financial advice. If you need that, reach out to me or your current financial advisor. Thanks again for joining me on this one, and we'll catch you next week.
My boy fishing, trying to bond like we should. Out on the water where life feels good. He's moaning about the boredom, no fish taking the bait. But I'm envisioning a shaman or Brockwell state. Yeah, he says this is work, Dad, and I had to think. Fun and work, they both demand the grind, that link. Invest in our time, our cash for the days to come. But where's the return when the outcome's numb? Fishy, fishy, go boom. Passive investing is cool for the herd, but we know inflation ain't just the CPI's turf. We stacking our coins, we playing long games. Dollar cost average, but know the history train. We who? Yeah. Delayed gratification, that's the doctrine we preach. Turning cold soup into returns that reach. But once you see what's in the hot dog, you can't unsee. Inflation is theft, it's the one you should flee. Yeah, to keep what we've earned, outrun the tax thief. We gotta think outside, beyond their belief. Accept the unknown, but trust in the gain. Solve the puzzle, find the path, break the chain. Okay, we go and break it down now. Shout out to y'all who knew Bitcoin at 3 grand. This one's for you, Banana Zone shall land. But I gotta confess, my phone, my Bitcoin gone. Dropped in the water, the lesson learned, move on. Critics say she's too risky, and they ain't wrong. Lost my seed, now I'm singing this cryptic song. Many chefs stir the pot, but I'm secure. If I'm gone or lost, my fam still stays pure. Hurdy-gurdy man drove it, and Jesus, he built it. Protect your wealth from government, from crooks from the sea. Multi-sig's the way, trust me, it's key. In this world of work, of fun and of shite, Bitcoin's the answer, the path to new wealth.